Hi folks, Pat Gage here, and on these videos we're going to cover the mastermind calls, the commercial real estate mastermind calls that we hold bi-weekly. If you want to join these calls, there's a link right below me right here, and it's also in the description. We cover topics of buying properties. We cover topics of people who have bought properties and show us our process, show us their numbers. Love to have you on these mastermind calls. So again, click on the link below and we'll see you there. Thanks much, folks.
Started here, David, because obviously people are still joining. But again, like I said, I want to start on time and keep and respect the time frame here. So, welcome everybody. Thank you for joining us tonight. I think this is going to be a real good informational Zoom call. We have a member of our let's say our I guess I should say our crew that's been with me for quite a while here. We had a couple, three people on these calls, and now we're kind of blossoming, which is great. And David here is here, local to Michigan, and that's where I'm at as well. And he's him and his team are closing in a couple weeks on the thing. I don't want to steal your thunder, but anyway, he started mid 2020 looking and getting involved in multifamily, and in the last month or two have put it under contract. They are scheduled to close in a couple weeks, and that's why we want to have him come on tonight and kind of share with you. He is driving, if somebody didn't hear that. He is driving right now, but he does have a PowerPoint, so once he gets back to his home office there, he'll do the PowerPoint. But I did want to start him talking on this and how, what we'll do is let him go through the presentation, have your questions in the chat if you would. Ready to ask a question. All righty. All right. Well, with that, I will turn it over to David, and if you can talk and drive at the same time and not go into a ditch, I'll let you.
I got four-wheel drive on, so I'll be okay.
There you go. All righty. It's all yours, sir.
All righty. Yeah. So thanks, Pat. Thanks for having me on. I appreciate it. Kind of like he was alluding to, we're actually planning to close in about a month now.
Oh.
It's gotten pushed back a couple of times. The first time, lender wanted a survey done, which we didn't really account for, and that took another 3 weeks. And now we got hit with a potential finding or phase one ESA, which I'll get into more later. But me starting out, like you said, middle of last year, I think I signed up for Michael Block's coaching program right at the beginning of July. But it really started with me getting transferred to another plant that's about an hour away from where I live. So I had, 2 hours a day sitting in my car, kind of like I'm doing now, and just started listening to different investing podcasts. Initially, it was all, stock market stuff because that's what's most common, but eventually started kind of rolling over to real estate. And then, you talk about real estate podcasts, and there's, so many different strategies, but the one that kind of appealed to me most was obviously multifamily, because you hear about how you can scale up easier. You're kind of protected more. It's better hedge against inflation. There's so many different benefits. And a key one that, I think kind of applies to everyone is once you take advantage of, pulling money, other people's money and whatnot, it doesn't really matter where you're starting from. Anyone can really get started. And once you kind of learn the first few steps, anyone can really be successful in this realm.
Did we lose you, Dave?
No, I'm still here.
Okay.
Trying to think. So, like I said, got started in the mentorship program early July, and it was perfect timing because Michael Block had his live conference. Obviously, it was all virtual this year because of COVID, but through that, obviously sat in a few of the presentations, but the key thing for me was the networking, because in one of the sessions, there was another attendee who was talking about how he had he had a deal under contract in Warren back in the early part of 20, I think in like February or March. But because they weren't able to come out and see the property, the deal fell through. So I think we talked a little bit in the session, but I followed up with him after and kind of told him, had we known each other maybe a month before, I lived maybe 10 minutes from where you were looking. I could have helped out, maybe went to see the property, handled some of the boots on the ground stuff. So we kind of started a discussion there, and that's where kind of our partnership blossomed from. So he shared with me some of the deals he had been working on. I kind of showed him how I would underwrite it based on using the syndicated deal analyzer, again, from Michael Bond, which I think probably a lot of us are all familiar with. Mm-hmm. So I think that kind of impressed him and his team. So from there, we kind of started working together, trying to find deals over here in Michigan. We had one under contract in Kalamazoo, which I think I shared with a couple of you, and that was one, unfortunately, we had to back out on once we got into due diligence. I don't know if the brokers were exactly happy we had to back out, but it was definitely the right move. Because once we started seeing how the property was really operating, how much, both physical and economic vacancy was there, it was basically the way our mortgage broker put it is it wasn't a good deal for our first deal. For our first deal, we want something a little cleaner. That way we can kind of build a better relationship with the lenders. Both lenders and brokers, I suppose. But kind of while we were looking at that one, the property manager we've been working with, he kind of tipped us off that a couple of the properties he managed, it was a 4-property portfolio that he managed, it was going to be going on the market. So I happened to actually be in the area, and I was able to kind of drive through them and see, kind of what they look like and whatnot. We contacted the brokers, got some information. I think at the time we were going to put an offer on maybe 2 or 3 of the properties. I forget which. This was back in, I think, the August-September time frame. But unfortunately, another investor came in, put an offer on the whole portfolio, and that went under contract. So, not a big deal. You just keep searching, try to find another deal. And we had a few come across our desk. We made offers. They didn't go through. All part of the process. But as we were doing that, we found out that same portfolio we're looking at went back on the market. So obviously, again, we pursue it, and we managed to get one of the properties under contract, and that's the one that we are planning to close in a month. So just in kind of summarizing all that, kind of a rambling while driving, but biggest things for me were taking that leap to sign up for a coaching program. That kind of gave me a little more credibility to talk with other investors. It gave the best thing for me right off the bat was getting the referrals to the main people my coach worked with, because he also works in the Southeast Michigan area. So, everyone he worked with, I could send an email saying, "Hey, property manager, I'm working with my coach so-and-so. I'd like to, learn more about what you do and see if there's any opportunity for us to work together." As soon as I drop my coach's name, they know I'm serious, that I plan on doing something good here. And same with, brokers, same with mortgage brokers, insurance guys, all that. So deciding that going to a coaching program was a big help for me.
I guess a quick question here, David. How did you settle on Michael LeBlanc's program? Did you say that you had looked at other ones?
So it was actually him. I listened to him on someone else's podcast, and I don't remember exactly what he said, but whatever he said on there, basically one sold me on multifamily, but right after I listened to that, I bought his book. I read through that. I may have read a couple other books, or listened to a couple other podcasts. I know I listened to his, but it sounded like what he knew what he was talking about. I looked online, and it's sometimes it's hard when you look online to see if a coaching program is credible or not, because you have the one school of thought where people say you could take that money and just invest in your first property. But for me, what really sold me on it is the fact that once you have that coach, you'll be able to move faster and you'll move more reliably. So a lot of, it kind of protects you from making some of those little beginner mistakes and potentially some bigger ones, I guess. But yeah, just going, I guess another thing I looked for as I was kind of checking him out was, I guess, the fact that I didn't see any negative reviews so much. I don't think I saw anyone really, maybe not praising it so much, but I definitely didn't see anywhere people were saying this was a scam or it was a waste of money, something like that. So I felt safe going through Michael Blanc's program.
That's cool. That's cool. And obviously you got the connections from your coach and, like you said, the introduction, to call the property managers and the other members of your team that you gathered to get that first deal, or at least get on the road to that first deal, right?
Right. So if you give me about 5 minutes, I just got home, I'll jump on my PC and we'll keep going. Sure.
Go right ahead. We'll let him exit here and we'll get going on. Does anybody else have anything? What I'd like to say is go ahead and put your information in the chat box, contact, and what I'll do is I'll send it out with the recording of tonight's call. So go ahead and put your information in there. Again, I'm using this as a networking event for everybody. I know some people from other states, but most of the people from Michigan. But we're looking at growing this and seeing this. We do this every 2 weeks, and next time we'll have a different speaker on that has just completed her first deal as well. And that one's an interesting one where she's actually did a hotel conversion, which is kind of interesting, and I want to hear more about that. Once David gets back here, he'll go through his PowerPoint that he had set up and go ahead and put your contact information in there, and then we'll let David finish up on his presentation, and then we'll open it up to questions that anybody has. Does anybody have any asks right now? Anybody working on a deal they need some help with, or some questions we can answer while we wait for David to come back?
I have one, Pat. Who is the gentleman that he's referring to?
Michael Blank.
Michael Blank. Okay.
Yeah.
Thank you.
Yeah, michaelblank.com, or themichaelblank.com is what he had. I've taken his course as well, and I use his underwriting tool. There's several of them out there, and I'm glad he brought that up. There's a lot of different ones out there, and once you get into a group of people, you'll find that they go to one particular underwriting tool, as we call it, or the other. So it's just easier if you're all on the same track or on the same underwriting tool, so you can kind of, once you share your information, you're looking apples to apples.
Okay.
Robert Beasley is another one. I've got his. He goes in a lot of depth as far as a lot more information. But you do definitely want to get somebody's underwriting tool so you can kind of quickly evaluate these when you're starting to go through and when the brokers start calling you, giving you stuff, so you can get the wheat from the chaff, as they say, and kind of just, okay, this is good, this is bad. And Michael's is very good as far as, the 10-minute offer, he calls it. He goes in and gets it, real quick, down and dirty, real quick calculation, and stuff like that. So, David, I see you're on, sir. And I think I have shared screens. I think you can take over you can share a screen if you want to do that and continue with your PowerPoint.
Sure.
All righty.
All right, there we go. So yeah, thank you everyone for your patience in that. Just, I don't know if I mentioned on the way in, I'm also still working my W-2 job as a launch manager in automotive, working on the Bronco instrument panel. So you can imagine there's a lot of activity with that. So I had to drive from one plant to another to deliver parts last minute. So just between that and the multifamily, just trying to make it happen.
The joys of plant work. I don't miss those, by the way, David.
I told Brad, my coach, if he ever wants to trade space, he wants to get back in, I'll happily trade spots with you.
No way.
Yep. So this is that PowerPoint I was kind of referring to. It just kind of shows month by month how we've got to where we are with this deal. Like I said, last July, joined the coaching program, attended this event. That's where I networked with another attendee. And kind of strange twist of fate, he's also a coaching student, and also we have the same coach. So he was seeking deals in Michigan, and that's where we kind of started working together. August, that's where we got tipped off about the 4-property portfolio. We were working towards 2 or 3, but like I said, another investor came in, swooped in, put an offer on the whole thing. So in September, I don't think we had anything really making under contract, but we still kind of just building our network, building relationships with brokers, investors, all that. Come October, that's where we found out that portfolio was back on the market. So talking with that property manager again, we went after Parchment Manor. That was the one they felt the most, they felt would be the best deal out of the 4. One of them, there wasn't a whole lot of value add opportunity. Another one, I forget the details on the other 2, but this one they felt the most comfortable with. November, that's where we got our PSA signed by both parties and started our due diligence phase and secured a lender. December, got our inspection done. And at that point, we were able to hold our webinar to present it to potential investors. And then come more recent, so January, that's where we completed the survey I mentioned. We got our LLC set up so we could open our bank account. And now this month, we managed to get, we may have a few more to get done, but we have almost all our funds transferred on time. And our closing date, which was supposed to be Friday, is now pushed back about a month pending that phase 2 ESA, environmental site assessment. So planning to close on March 12th. And we, obviously the plan is to get in and start implementing our CapEx improvements as quick as we can. So some of the things I think we've done well on our team, and again, this is all our first deal, so this is probably common sense to a lot of you guys, but it seemed good to us. But we use a shared drive on Google Drive to store all our documents. That way everyone always has access to it. We kind of leveraged our allotted time with our coach to try to go through our progress with the deal. Again, all the main points of contact we're using, the mortgage insurance brokers and property manager, all those are references from our coach. Obviously, we're doing regular calls or Zoom meetings with all our members to keep up to date, maybe once or twice a week. And obviously that frequency goes up as we get closer to closing. And then it may have been towards the end of due diligence or right after, we ended up bringing in a 3rd coaching student to help with our workload. Because as I kind of gave you guys an example, I'm kind of pulled in all directions with my job, and then the other partner, he's in single family. He's a real estate agent. So I know his workload was through the roof at the end of last year. So bringing in that 3rd coaching student really helped us push forward. And now the real meat and potatoes is the lessons learned. So stuff we are obviously going to make sure we get done next time around. So I know everyone says this and we must have just overlooked this, but always make sure the PSA states that the due diligence phase doesn't start until the buyer has all our requested documentation. So I think we had a 30 calendar day due diligence phase, but I think we may have lost maybe a week and a half because we were still waiting on some of the documentation. So that's an easy fix going forward. Also, to ensure that PSA includes a clause to extend due diligence and finance phases. Obviously, we've had to put in for several extensions that the seller and broker were, they were open to negotiate. Obviously, for each extension, we had to put in more of that earnest money deposit, at which point it would be non-refundable. But luckily, it goes towards the purchase price. So that I think we may have gotten lucky there, but that could have hurt us in this deal. Another one is actually being conservative, or even more conservative with the timing aspect. So I know, everyone preaches being conservative with some of the financial numbers, but we learned pretty quick we have to be just as conservative with some of the timelines. So, we expected our LLC to get formed and get our EIN number maybe within a day or two. But because it got held up at the state, it took us maybe a week and a half. Another one, like I mentioned earlier, the survey that the lender requested, that one itself was a 2 to 3 week lead time. And now, late in the game, we're learning about a phase 2 ESA that's pushing it back even further. So again, just being conservative, not only with the finances, but also with the timeline. And then again, common sense stuff, but I think with some people you have to be extra detailed, but making sure investors are using the same day wire transfer when transferring funds. We had a few people who used the ACH transfers and they actually got returned to the sender. So if they try to do that, last minute, that could have jeopardized, closing. And then last one, obviously insured investors are entering the correct account details, like the account number, when transferring their funds. Common sense, but you gotta be ready for anything, right? So that's our list so far. I'm sure as we go forward and get through closing and afterwards, we'll add to this list. So that kind of takes us to where we are now. This next portion is what we shared with investors.
Hey, David, this is Dharmendra. Is there a way to prevent the error about your, wire transfer accounting details so that they don't make any mistakes there?
On our end, I don't think there is.
Okay.
So obviously, we provided the wiring instructions.
Yeah.
I think the investor in question, he may have done it on his own online. So I think if we had to try to error proof this, we would have to require investors to go into a bank and have the bank do it. Okay. I think what happened is they just fat fingered one of the numbers.
Oh boy.
Put a 1 instead of a 2, something like that. So, he went to the right bank, just to the wrong account. So
that's a good thing.
Luckily, he was able to get that fixed. The bank was able to return his money, and I think he said he wired it yesterday, so we should be seeing that in our account today.
Oh, okay, good. Money was not lost.
I know what other people have done is they've created videos for their clients, and I've done the same, and showing them that ACH is different than wire, and a lot of times in a wire there's a maximum which you can transfer in a day. I just went through this with an investment I just invested in that they told me, hey, yeah, you could do it. Well, they were limited to only $5,000 online in a day's time. So that's, lessons learned there. So I would say maybe some videos would probably be helpful to let them walk through that. Because an ACH is different. Yeah, an ACH is different. ACH is typically when the syndicator sends the money to you, but the one-day wire transfer, one-time wiring of fee is just one time. So that's why you have to go into a bank branch. And obviously, and I don't mean to steal your thunder, David, but that's what we did is, now I had to make an appointment. They had to, not just go up to the bank. I had to make an appointment. I had to, set all this stuff, which again is the lessons learned.
Yep.
All this stuff was easier before COVID. Good stuff though.
Oh yeah. Yep.
Hey David, this is Chip Strohs out in Denver. I had a question for you. You said they're doing the phase 2 environmental. Do they normally require phase 1 and phase 2 on the environmental, or is it usually only phase 1? I mean, do they have to have a reason to do a phase 2?
The way I understand it is the phase 1 is pretty standard. That's just kind of, I think, like a general, audit of the property and its history. What popped up on ours is, as they were doing the kind of looking through historical records, they found that our property was listed as a dry cleaners at several different years before the 1960s. So because of that, they explained that dry cleaners obviously use certain solvents to help it get out stains. So the fear is there's a possibility, they didn't find any definite proof, but there's a possibility that there could be subsurface contamination that would need remediation. So based on that, they recommended that a phase 2 be done. Talking to the broker, he was obviously, I think the way we were putting it is he was kind of frustrated with that, because he's told me that really during the pandemic, it's kind of popped up more that lenders are requiring phase 2 environmental audits. I think it's just an added layer of protecting themselves from risk. So I get that. So maybe I can't really speak for before COVID, but definitely now it sounds like lenders are just being extra cautious. So if there's anything that would require a phase 2, the lender will probably go for it.
All right, thank you.
Yep.
So David, quick question. Is the seller going to pay for this, or would you have to pay for this out of your pocket?
We as the buyer, I believe, are paying for the phase 2, which I think was around, I want to say $4,500, which, hurts us, but if they do find something that requires remediation, the seller will have to get that done before we close.
Got it. Thanks.
I know one of our partners. He is a friend who I think is doing multifamily syndications in Toronto, and oddly enough, I think they had the same issue. For them, though, the phase 2 was going to cost them $20,000. So after hearing that, us having to pay a $4,500 bill it didn't sting as much. It still stings, but not as bad, I guess.
How many units did you say this was?
Sorry, what was that?
Is this complex?
Coming in a little quiet, sorry.
I think he asked, how many units is it, Dave?
Oh, 41. Yeah, so this next portion I'll kind of go through what we presented to the investors. It'll give some more detail. This here, I just wanted to make a note that because our deal is still technically active, I changed all the financial information just to avoid any potential SEC issues. So just want to point out, if any of the numbers don't make sense or don't align or even reflect a good deal, the reason I want to share this is just to show you guys the content that we shared. So, and then if you want to know more details, we can set up kind of one-on-one. I can go into more detail with you guys. So just kind of running through. I'm going to run through it quick because again, I'm just talking content, but kind of introduce our team. General boilerplate disclaimer, kind of another SEC regulation item. Kind of giving some takeaways. Obviously, there's no way around. We got to acknowledge the pandemic, what we're doing about it. Kind of highlighting what our projected investment returns would be, and then what kind of other advantages there are to investing in multifamily. Again, more investment overview. Total units, purchase price, so on. Our property management company. Kind of giving some background on who will be managing it. For those who are less familiar with multifamily, this kind of gives them a better idea of why multifamily is a pretty solid investment opportunity. Going over the area, so Parchment is, I don't know if we have it in a map anymore, but it's maybe 5-10 minutes north of Kalamazoo. Talking about how the economy is going to be growing in the near future. Rent trends. And I started digging into what our business plan is, what the opportunity is at our property, and how we plan to take advantage of it. So the main one with our property is it had a higher than average turnover and vacancy rate based on the some leaks coming from the roof. So obviously the biggest portion of our plan was to replace the roof. Replace the roof, less leaks. We expect that, making the units would last longer. That would cut down on our turnover. Then we kind of get into more of the numbers, unit mix, property overview, what our CapEx budget is, what we plan to do, what we plan to fix up in the interior and exterior. Kind of gave them some more pictures of what the interior of the units look like. Just a quick copy and paste for a P&L out of the SDA. Again, this is copy and paste out of another deal. The projected investor returns. So from those familiar with the SDA, we took a snapshot on the summary tab and the returns tab. And then kind of, wrapped it all up, talked about what the expected returns would be, hold period, and then gave them a timeline of what we expect to do next. So I think we held this, I want to say December 18th. So, we had already sent out investor packets in the webinar, opened up our Google form sheets to collect the soft commitments from investors. December 30th, that's when we plan to have the PPM available, the private placement memorandum. Based on our first closing date of February 4th, we wanted to have our investors start wiring funds on January 4th and have all our funds wrapped up by the 18th. So obviously, plans change. You just gotta kind of adjust and move forward. Providing some contact information and just sharing some of our references.
Awesome. Oh, anybody got any questions for David?
Quick question for David. I may have missed it, but did you contribute any money to the deal, or it's all yours, like sweat equity?
Let me reshare because I must have skipped over that. Yep. So this page here, we were looking at the summary and projected returns. Obviously, we had a different GP-LP split, but us as a GP, we were investing more than $200,000 in the opportunity.
Okay.
I think it was actually more than that what it turned out to be, but yeah, just about we plan going forward. We always want to put some into the deal ourselves.
All right, thanks.
Yep.
Yeah, let's make sure that this is a syndication model. So that's why we do a 90-10, 70-20 split. That's how the syndication model works, is the majority of the shares or ownership go to limited partners, and Dave was on the GP side. So I don't know if everybody understood that.
So are limited partners always called Class A members? Is that pretty standard?
From my experience, yes.
Same applies for GPs. They're always called Class B.
Yes.
Got it. Thank you.
Yeah, that's kind of new to me. I've always, I've just gone off of GP-LP. I've never, I guess I'll take a note of that myself.
Is it possible to get a replay of this, because I missed the first 20 minutes?
Yes, that's a great question. I am recording it. It will be up live on our Facebook page, which I'll give you the address. It's in the chat, actually, but I'll put it in there again and tell you. But yes, it will. We are recording. Great question.
All my questions are great, always.
Well, I only invite people with good questions.
Sure.
So that's good that you did that. That's awesome.
Yeah, and just kind of going back to my timeline with all this, again, just started last July. So this being our first deal, I mean, you saw our lessons learned sheet. We're going to have plenty more. So even for us, we're still learning. I think the biggest thing, you'll hear this from anyone, is You just gotta, take the courage and just take that first step and take some kind of action. You trip up, mess something up, and just learn from it and improve on it next time.
Exactly.
I have a question for Dave.
Go ahead.
I've noticed that the building is a Class C. I'm just wondering exactly, how much research did you do on this in order to feel comfortable investing in a Class C building versus sticking with something more of a B or A? Was that more of a financial decision for you? Or did you guys actually do quite a bit of research on this property?
We did quite a bit of research on the property. Just general area. Again, it's not too far from Kalamazoo. Parchment itself is a pretty solid area.
Yes.
I may have glossed on this, but the property management company, MTH, they manage it right now. So that was kind of fun going through due diligence because, we were going to them for, their advice on what they think was what we need to do with the property, with their
How the current people are doing.
Sure. Yeah. I saw that your repairs were minimal, and typically on a Class C, you're looking at older buildings, a lot more repairs. And it conflicted with what you were saying as far as the budget on your repairs.
So this, I just changed to something else really quick because, again, our deal is still live. So I didn't want to tiptoe that line with the SEC to, advertise too much as opposed to just sharing content. So I can say that our CapEx budget is much more than $62,000.
Okay. Yeah. Cause that's kind of what's throwing me off with a Class C building.
Yeah. Sorry about that.
All right, thank you.
Kind of disclaimer stuff we have to say when it's live like this so we don't get in trouble.
Yeah, and that's, Pat and I have kind of talked about this because, again, originally, we were supposed to close on the 12th. I think we would have been safe sharing all the actual information we share with investors. The investment period would have been closed. We would have been all set to close. But because this got extended and we're still technically active, I didn't want to last minute change it on you guys. I still wanted to share something with you. So again, just adjusting to this situation.
Yeah, the fluid motion of multifamily, right?
Oh yeah.
So what are the negative effects of a delayed closing, David?
I guess on our end as the buyer, for those people who have already wired their investments, basically that money is just kind of sitting in our account. It's not earning any returns yet because we don't have it under contract. I think another indirect issue is because it's getting extended almost, basically a full month. Some of the investors might get a little nervous with that and might want to back out, prior to close. So far I've talked to my investors, everyone's, been pretty understanding of it. Out of the other partners, I don't think we've heard of any investors who are really, planning to walk away. If anything, the biggest thing for us is the buyers. It's kind of disappointing. We're only a couple of days away from close and this pops up. Now, on the seller's end, basically they have to hold this property for another month. So obviously, they know the property is planning to close. So I don't know how much money they've been putting aside for any last minute maintenance or repairs. So they're still, they're eating the cost of operating the building.
How long did it take you to raise the required capital?
That one's kind of hard to say because as we've been getting more into multifamily and looking at other properties, we've been having, conversations with different people looking to possibly invest. So once we, got this under contract, we kind of shared some more information. And then once we had the webinar, that's what really kicked off, having people who have been interested all along start signing up. So from the date of the webinar, December 18th, I don't know, maybe a few weeks to a month of getting, enough people to sign up and, get soft commits.
Okay, so you already had some investors lining up waiting for you to find a deal. basically.
Right. Yep.
Okay.
And I think that's a key part with multifamily in general is, as you're looking for deals, you're also looking to see who's going to be interested in investing. Because I know my coach warned me of that early on, is I was focused more on finding underwriting deals. Me being an engineer, that's natural to me. But if I put all my focus on that and not on money raise, then, I'll get a deal under contract. If I have no money to close it, then what's the point? So it's the two kind of go hand in hand.
Hey, David, how did the property perform the last few years?
Over the past few years, I forget the exact financials. The biggest thing we saw was it looked more of an economic vacancy. So when we were underwriting, I think at the time they maybe had 3 vacant units, but it looked like there was more of a turnover issue. So talking with the property manager, the main driver of that was the roof that needed repair. So because it wasn't repaired, they were kind of, I guess to put it lightly, they kind of half-assing the repair. So that was causing more leaks into some of the units. So it kind of drove some more turnover.
Okay, thanks.
I have a question for David.
Sure.
What made you mentioned how this is pretty much your first deal. What made you go into something which seems relatively large rather than starting with something smaller and working up? What's any reason why? Was it you couldn't find anything smaller, or you just were like, hey, let's go hard, we'll go early?
So initially when I started, before I kind of, partnered up with the other investor, the other coaching student, I was kind of looking more around 10 to 20 units. But once we kind of partnered up, there's 2 of us working on it. They had some people, they already had some of the money raised. We had our coach. So we felt more comfortable going with something larger. And again, from, a lot of stuff we listened to on podcasts and, read about is, it's basically going to take the same amount of effort for a large property as it is for a smaller property. So going for, something, I think we were looking between 40 and 80 units. And then obviously this one, it's on the lower end of that spectrum, but it still fit our criteria. But obviously just, with any property in general, the more units you have, the more flexibility you have. Obviously with more units, vacancy doesn't hit you as hard. Obviously the easy comparison is single family. If your one house is vacant, you're at 100% vacancy. If you have a 100 unit property, you have 1 vacancy, you're at, 99% occupancy. So having a larger property, it indirectly adds a layer of protection for you.
Great, thank you.
Yep.
So you said that average annual return is around 15.1%. So the net returns to the passive investor after all the fees have been paid, or is the fee structure aligned to provide a preferred return to the passive investor?
So if we were showing like a 15% return, that would be after any fees or deductions.
Oh, okay. Thanks.
So let me see. Yeah, so that would be calculated right off of the member cash flows.
Mm-hmm.
Member cash flows versus what they had invested in the project.
David, I joined a little late as well. How did you identify or find this particular property?
This property, so the coach we were working with referred us to a property manager that, we kind of referred to and, kind of picked his brain a little bit as we started looking for deals. So based off of that relationship, this was actually a property that he was already managing. So when he got the word that it would be going up for sale, he tipped me and my partner off, to start looking at it and pursuing it.
So I heard you say you were networking with the property manager, and that's how you identified it. Is that correct?
Yep. That's it.
Okay, gotcha. And then the second question, you were referring to your coach.
Yep.
Did you explain who your coach, or not who per se, but what is the role of your coach?
Yep. So last July, I signed up for Michael Blanc's coaching program. So among other benefits of the program, you also get assigned a coach, someone else who's already in multifamily and has, reached the financial freedom stage. So they pretty much available, throughout the week, any emails or calls, stuff like that. But you're also allotted, I forget how many, but one-on-one calls. So they'll answer any questions you have. They'll kind of, guide you in the right direction if you're not showing any progress. So, in one of maybe my first or second meeting, that's, he kind of hooked me up with all the main points of contact that he uses in his business.
Understood. All right. Thank you so much.
Yep, no problem.
Any other questions out there? I'm sure people have questions. There's no.
I have a question. This is Chip Strohs again out in Denver. On the annual, the projected investor returns, it says a $50,000 investment is projected to return $52,807 in 7 years. So am I to understand you're only going to make $2,800 in 7 years?
That would be above and beyond what you invest.
That would be above your initial investment, right?
Yeah.
Okay, I kind of misread that.
I have another question actually for Dave. You said you're dealing with a management company. I'm sure you guys have discussed what you guys are planning on doing as far as types of leases. Have they talked to you as far as what they recommend as far as types of leases, full service versus triple net, modified gross, et cetera? Have you guys really narrowed that down as far as what you're going to be doing on this?
I don't know I don't think we've dug into that much detail with the leases. I think with us on this project, it was, our business plan was more on getting some of the CapEx items fixed and then letting the property management team basically run the property as they have.
And did you say that there was only 3 units that weren't rented? Did I hear that correctly?
Yeah, at the time when we were underwriting, it was three units were vacant.
Okay, so it's 97 or pretty much mostly rented out, I think.
Yep.
Okay.
But David, one other question. I know you said that you've altered the numbers to because your deal's not over the finish line yet. I'm not sure if this chart that you have on the screen now is one of those charts you altered, but what got my attention is your cash on cash return for the first year or two, 2.57%. Are those numbers reflective of your deal, or these were modified numbers?
These were all modified.
Okay, and so without you sharing, is your deal down in that range of for your first few years for your cash on cash, or they'd be a lot better?
I believe our deal is better. I know it, at least for year one, because I think as we underwrite these, we try to get the year one cash on cash above 3%.
Above what?
Above 3% in year one.
Okay.
I have kind of a follow-up question with that.
Because I go ahead. I'm sorry, Matt. Go ahead.
I'm sorry. I was just to say, if you didn't figure out what type of leases you guys are looking at, what you're planning on doing, I mean, how do you really have that narrowed down as far as cash flow? Because I mean, I know that the types of leases really help determine what type of cash flow you're going to be pulling in. So I mean, how did you guys really narrow that down without determining what type of lease you're going with?
I guess, Matt, let me I guess the type of lease, there is only one residential lease. You talked about triple net and stuff like that. That's typically done in shopping centers and more commercial properties. These are residential leases, In realistic, the only thing we can do in a residential lease is add on fees for water and sewer and stuff like that. So that. I was kind of confused when you're saying a type of lease. It's a residential lease. It's not a triple net lease. We as multifamily owners can add on fees for they pay their own water, they pay their own sewer, they pay their own gas. And that's about all we can do, as well as the rent raises.
I know different buildings have it set up differently. I mean, there are different utilities that are included as part of rent in certain situations, and that's why I was wondering.
Yeah, I'll take that one away. I'll talk to the team and see what work we did on the leases. I'll let you know, Matt.
Okay, that's cool. Yeah, because right now, I guess, who's paying the utilities right now?
Right now, I believe landlords paying water in both buildings. Tenants are paying gas and electric.
Yeah, and that's more or less what I'm talking. So that's more of a modified growth.
Oh, okay, I get it.
Okay. Yeah, thank you. I wanted to clarify that. I kind of figured that's what it was.
Like I said, I'm still learning. So hearing about these different leases, like, oh shit, did we miss something? I'll add that to lessons learned.
Yeah. Well, that's why we do this, right? And that's a great question.
Yep.
Hey, David, is there any chance you could turn around and bill the water back to the tenant?
Potentially, yes. Obviously, there would be a cost associated with that, so that would just be something we have to basically do some analysis with.
So, yeah, David, from what I know, it's a pretty expensive process, right? You got to meter them up, and each meter can be expensive from the city, right? You got a license for them and things like that. Is that correct?
I believe so, yes.
Yeah, it depends on.
But I mean, if you, I'm sorry, if you get the bill, can you not bill back or recoup? Like you pay the bill, and then you say, well, based on. Well, I guess you would need a separate meter for that to know who used which water. Yeah.
If it's master metered, you can bill it back as a flat fee to your tenants. And again, it's municipality based. There's also a system we call RUBS, or utility bill back system, which you're talking about with the meters and stuff. It varies on area and stuff like that. Typically, you can do like a flat fee for water, $20-$30 a month. And again, it's in the area. If the other apartments, complexes are doing the area and it's accepted, you can do it that way. You can't make any money on the utilities, but again, moving, 41 units, let's say $100 a month times 12, even if you get $20 a month billed back to the tenants, you're still ahead. So there's a couple different ways to do it.
I remember on Julie Peterson's her Zoom at 8 on Tuesday, she had someone on there that focused on the water conservation methods and bill back. And obviously, it's more cost effective on a larger property. I forget the kind of the break even rule of thumb. I want to say maybe it's around 50 units. But on a smaller property, kind of like we're saying, there's a cost associated with it, so it may not be cost effective to bill back directly to tenants. But again, it's going to depend property to property. So, but it's definitely worth looking at.
It goes like you said earlier, Dave, as far as your business plan. What is, if you're trying to raise the rents, but let's say $50, do you put that on the back burner and get the raise of the, what I'm saying? So it's kind of, you have to look at it kind of in, what's your business plan? You're just ready to raise the rents, and that'll help you and cover some of that cost, and then later put that flat fee or do RUBS later.
Hi, David. I got a question. I just wonder, for the investor you find, did you need to provide a lot of education to them, or they already have some like-minded multifamily investing kind of that sense?
So in the webinar, we gave a little bit, kind of a small snapshot of why multifamily makes sense.
Mhm.
But prior to the webinar, as we're meeting people and, kind of sharing what we're working on, it's really going to vary person to person. Some people may have, they may have had experience with single family. They may already be in multifamily. Some people might not be investing anything. They might only do maybe their 401k with their main job, but haven't looked on, into any investing on their own. So that's why on our side, we really need to learn as much as we can of
Right.
the overall process and then, how you can invest. That's how we
Right.
can help educate others.
Yeah, I was wondering how do you need to pay a lot of effort to convince them it's not that risky and you're getting like 15% return and not take too much risk.
Again, to me, it just kind of varies person to person. Obviously, if, something didn't pan out right, we would do everything in our power to make sure the investors got their return of capital, their return on their capital and of their capital. But, with multifamily, and a good point with this versus the stock market is with any of our buildings, we always have insurance on it. So that's, something we're wrapping up now is getting our insurance policies in place to make sure we have the right protection in case anything goes south.
Okay, thank you.
Yep.
So with the investors, you guys are having equity split, right? Not monthly cash flow, right? No return monthly return to the investors.
I'm sorry, you kind of cut out a little bit.
For the investors, right? You're mostly having the equity split after the 7th year when the sale happen, or you're providing them any kind of a cash flow or percentage?
So for us, I believe we're planning on quarterly distributions of cash flow.
Okay.
And then obviously when we sell, they would get a cut of the profits.
Okay,
and then if we do decide at any point to, refinance, because obviously, we're forecasting 7 years down the road. If market conditions change, that it may be more, we may get better returns if we decide to sell in year 5 or 6.
So, but for the first, second, third year, if your cash flow is low, right?
Mm-hmm.
Would you be providing them the percentage even from the first year or from subsequent years when the property stabilizes?
I believe we're planning to do quarterly distributions right off the bat.
Got it.
Yeah.
Thank you.
So who is in your team? Who is doing the asset management and who is doing the construction side? I don't know if I missed a slide.
So on our first page, I believe between Princess and Mauricio, they're handling a lot of the asset management after close. Myself and Brady, we plan to kind of lend a hand as needed. Obviously, I don't think we had it listed here, but these 4 on the left are all in California. Brady's in North Carolina. So if someone needs to go see the property, that's going to be me.
So what happens down the line, 7 years down the line, if the market tanks on? Will you guys call for capital call or do you have a plan for it?
Again, we would have to adjust on market conditions. If like you said, if the market crashes, we may just hold on to the property until values go back up. But because, with multifamily, the value of our property is based more on our, the going cap rates and our NOI or net operating income. Right. That's kind of how we can force the value of our property.
That was a great question, and actually, we just lived through a crash. If you haven't been, this has probably been the worst thing I know in my lifetime that we could see happening. But that's a great question.
Yeah.
David, why don't you go ahead and put your contact information up on the screen from that. You had a slide with your contact information.
I'll throw it in chat.
Okay, cool. Awesome. Any other questions? I don't want to hold David because he hasn't had dinner yet, I'm sure, because I didn't hear him go through the McDonald's drive-through, so I don't want the guy passing out here and dying on my thing here.
Now you remember the automotive world. You just look through it one way or another.
You get it through. If somehow those cars get built, I don't
know how we do it. I'll be honest with you.
I'm still amazed by it too. It's just amazing how they come off the end of the line and they actually turn on at the end of chassis and they actually roll off into the dynos. It's amazing. But anyway, I regress. Any last questions for David? Anything, comments, questions?
I just want to say thanks for everybody taking the time.
Well, thank you. Thank you for attending. I appreciate it. And watch your email, guys. We're going to do this again in 2 more weeks. This is a bi-weekly presentation. David, thank you very much. I wanted to say thank you. This has been great. You've provided a lot of value and a lot of great information. I'm definitely going to have you come back when we can talk the real numbers and kind of, but I think it was very valuable. And I appreciate the lessons learned. That was awesome. And, thank you very much.
I appreciate you having me. And, again, I appreciate everyone's patience with our first portion of me driving in.
No problem. Well, listen, we appreciate you spending your night with us. Folks, again, it's 8:02 here. I want to honor my promise to you, ladies and gentlemen. Again, look for your email. I'm going to put this out probably tomorrow morning. You'll get the email. Everybody's on here and the recording where it's going to be and also the chat. So we'll go from there. And listen, thank you very much again. And we'll see you in a couple weeks.
Thanks, Pat. Great job.
All right, guys.
Good night, everybody.
Bye.
Thanks, David. That was great, bud. That was awesome.
I'm just making sure I saved the chat.
Yeah, I'm doing it right now.
All right. Thanks again, Pat. I appreciate it.
Oh, thank you. Awesome. Thank you.
Take care.
Yeah, you too now.